And now, without any further delay, let's begin today's event. I'd like to introduce your moderator for today, and that is Lynn Gresham. With that, Lynn, the floor is yours.
Thanks so much, Tanya. Good day, everyone. We're pleased to have you with us for this web seminar, Financial Wellness in Times of Uncertainty, Choosing the Right Plans for Your Employees Amidst a Recession. With economic turmoil continuing, employers and employees are growing increasingly concerned about finances. HR leaders are looking to financial wellness solutions to provide workers with some possible relief. But how do employers best help employees now without setting them up for debt down the road? That's what our three speakers are here to talk about today, and I'd like to introduce them to you now. Leading off and directing the discussion will be Amy Hollis, founder of Hollis Consulting. Throughout her career, Amy has engaged, either directly or through her teams, with almost half of the Fortune 500 as the lead strategist in the overall design, provider selection, and implementation of voluntary benefit programs. Also on the panel is Bob Burke, sales executive with Savvi Financial. Bob has over 25 years of experience assisting business owners and individual investors in preparing for retirement and working toward overall financial wellness. And rounding out our expert team is Scott Hudson, Senior Vice President of Sales at Aura. Over a career spanning more than 3 decades, Scott has empowered benefits brokers and other professionals with the tools that help them implement strategies to meet various business needs. I'd like to welcome you all, panelists. And Amy, I'll now turn the program over to you.
Thank you, Lynn, and welcome everybody. And thank you for joining us today as we hear about some tools for financial health at this really opportune time when as we are seemingly rounding the curve of this very surreal season, which highlights, I think, more than ever, the focus on this very topic. I think it's worthy to bring up before we even get started that we are all very cognizant of what many may be facing at this time, potentially unprecedented spending cuts or maybe even, facing workforce reductions. And obviously with very little time to devote efforts outside of the crisis at hand. And our hope as we constructed this session is that we'll be able to give you something, take into context within the discussion that you can really walk away with and that is going to be relevant and tangible today in your business. So back to financial health. It's obviously been a very popular topic over the last couple of years, to be sure. However, I think it's taken on an entirely different level of importance over the last few months. With the large question mark of how do we emerge from this storm to best help employees navigate options in a way that's responsible and also to support company financial objectives in light of the specific needs and critical needs that are relevant right now. These statistics are known and showcase the importance of employers in recognizing the impact of financial health on their own organization's financial health, and invariably it does have a direct impact on employers' bottom line. These are things that are fairly well known, all of which, of course, has been really magnified over the last few months, as I said before. These stats, have been largely published by the Fed are alarming. Some of the financial crisis areas are due to, medical expenses, even when people have insurance. But I think the overarching theme of here is higher debt and lack of access to emergency funding. Those that are really, living paycheck to paycheck and a heightened impact of those, who really could not afford an event like we have had over the last couple of months, and we are specifically here. So in light of that, a couple of notes to pull from this data. There's a lot of really great financial data that's out there that showcases the bigger picture. And a couple points from here is we really cannot make the assumption for those that are making more money that they're going to have less financial stress. I think that that's a notable point to bring out. And this study, at least at the threshold that was shown here at $75,000 a year. The second thing to point out is the actual impact of financial stress cannot be categorized any other way than significant, especially within the workforce and the workplace. With a significant financial hit to the employers when employees are stressed in these areas, as shown in the lower left chart. But third, and I think the resounding theme, is that the financial challenges are really public enemy number one as stressors for employees, and often by multiples of the other areas of stress, over health or job concerns or even our relationships. And it was surprising to me that some would literally sacrifice a future pay increase in order to have a richer benefit program. I thought that was worthy of bringing up. So with all that said, front and center, yes, financial health is a big issue, but I think one of the gaps in the benefits arena as it relates to financial health is the variety of definitions. How you actually have an impact on something when you don't have a clear definition or a way to measure it, or how can you establish a goal to an elusive target. So I thought it'd be helpful to frame up the discussion today with the speakers on some ways that you might want to consider framing this or looking at it. So this, to get there, first we have to kind of pull our viewfinder back a bit and see clearly what all of the financial areas are that impact financial health. And this circle chart on the left represents the categories or decisions to be made by most. And I've subcategorized them in categories as it relates to the employer benefit footprint. So what that means is in the dark blue, you see the traditional benefit areas, certainly health insurances, but retirement, other insurances like life and disability and even critical illness, and some are even including identity theft as some of the traditional benefit areas. The lower right slices that are in a little bit lighter blue are the more unique benefit plan options like student debt or even charitable giving, caregiving costs. And these are really more the emerging benefits landscape as potential financial decision areas for employees. And they're coming up on the benefit menu for some employers. And but really more than niche areas. And the question is posed, which ones for which populations? And we're going to get to that here in a bit. And the last are the slices in the white. And those are typically outside of the employer benefits decision areas, no less significant to your employees. But the point of this wheel is to show that the decisions of each of these areas are interdependent. And frankly, where I think the definitions of financial health has been a bit elusive, as I referred to before, as the subject of financial health usually comes from employers, through a single slice, or say for, one that's being promoted in a particular service area, without that larger context of how decisions need to be considered within context with one another. So in reality, as an example, you shouldn't be making decisions about how much to contribute to an HSA or your 401k without considering the balance you have on your credit cards that may have 25% interest, or, close to defaulting on a student loan payment, as an example. And in most financial wellness initiatives, unfortunately, they're walled off from each other. So possibly this may be a better foundation for true holistic financial health, and one that Bob will be able to speak to more directly here in a few minutes. So with that in mind, we've got a couple of areas to tackle. One, which plans should you as an employer offer, or you as an advisor support your employer in giving that guidance that's customized to the employee population? And second, is the problem that you're trying to tackle with offering the plan big enough in one particular area that employers should actually consider supporting the expense to solve for that problem area, a way for them to alleviate the stress that may clearly be impacting the employer financially, if it's a big enough issue. And third, not noted here, but how to best present these options in a way that can be personalized for each employee. So first the decisions for the employer, and then how do you guide the employee? And that's the glide path that this slide represents, to define, measure, diagnose, and then prescribe, and in hopes to give tangible action steps to a very strategic problem. This next slide is a place that you might consider starting. First to define it, and I've defined these into 4 categories just for simplicity. The first think of the impact of now versus later, and also on security versus freedom. So as an example, security now means day-to-day expenses. Are they being adequately managed? Payments on time, enough to cover, expected living expenses and not living off of credit. And then moving on to later, do you have enough to cushion comfortably or sustain unexpected or unplanned expenses or crisis? COVID comes to mind, right? That you just didn't plan for. And think back to the stats that are represented earlier, how important this area is. How many have the ability to withstand, a $1,000 unexpected bill or a $500 unexpected bill, or a deductible, or a pay cut, or a halted bonus check, or, all these different areas that are actually very relevant now. And I think I hear some heads nodding, if that's correct. And then put that in context of, financial freedom in the now, which is lower left, which means employees have the freedom to pay for those items that bring enjoyment in the now, without credit cards, again, like vacation funds, art, spas, whatever brings that individual an enjoyment. And then last, the employees, are they on track with their financial goals for financial freedom later? So are they ready for college? Are they ready for retirement? Are they ready for the weddings of many daughters? Whatever those expected or planned expenses may be, as opposed to those unplanned that are in the later for security. So with that, the second step is to measure. Now, I've listed some indicators within each of these 4 categories that represent financial health. And I put some examples in the categories that are tangible measures of each, but I think a better way to showcase this is to actually give you an example. And you'll see that, we've got debt balances or college savings. There's lots of ways to measure this, but I'm going to give you a specific example. And this is really an area, as far as the diagnosis, this is an area that for further discussion within Scott's portion of the presentation. There are ways to actually tangibly measure both the source of the stress areas and the scope of the stress area. Back to the topic of, helping employers discern the gravity of a problem. Is it worthwhile to invest from an employer standpoint, or just to offer it as a voluntary benefit in a financial solution? We may realize that somebody, making over $200,000 is living paycheck to paycheck, or is maxed out on credit card, or is making late loan payments. And also, we may not assume that a single family income making, $50,000 a year, family of 6, isn't underwater with debt, or, isn't on a healthy track towards retirement savings. You can't make the assumptions just based on how much somebody makes. And Scott's going to discuss some really exciting emerging methods of analytics that are inherent within the program that his company represents, that employers can tap into, that actually measures some of these issues, so the prescription can be precise and not really guesswork. So with that, back to the prescription, this is where we all kind of come full circle, and back to where Bob's area of discussion is going to be. You can prescribe, the plans beautifully, but invariably employers will need that black and white guidance that helps their specific situation. And, their benefit package within a personal profile with the guidance that is not driven by any type of product promotion. And without stealing Bob's thunder, that's really his area of how it is that within financial health, how do you look at all the aspects in the decision areas in a holistic manner, and including some of the benefits that employers are offering, and to help guide the employee to make the best decisions based on theirs, especially when you're coming into and out of this type of season that is unprecedented. So with that, Bob, I'd like to turn it over to you.
Great. Thank you very much, Amy, and everybody for attending today. And as Amy alluded to the fact, what is the right financial wellness solution? And if an employer or you as an individual are looking for a solution, what is it? Why are you going to choose that? And what's the basis for the decision? And so, as you saw with what Amy put on the slides earlier, it's a complicated area, but things have changed over time. So just to set the stage of what financial wellness is and how has it changed over time. So really at first, financial wellness meant financial literacy. Some basic concepts of banking and checking and savings, pretty much a limited scope, a bit of an understanding of finances. But that's changed over time as everybody's life has changed. Life has gotten complicated. So financial wellness now, even though that's going to be a term that has a different definition for everybody giving a response, overall, in today's marketplace, what is financial wellness designed to do? And it's really designed to create overall financial security, to help individuals create a financial plan throughout all aspects of their lives so that they are able to achieve their goals, understand where they're going, and some tools and resources on how to get there. A major portion of that is making sure a financial wellness plan, if it is in place, is a successful plan. So there's a lot of different options that are out there. Each employer group is going to have a unique set of employees, and their needs are going to be different. So the question really is not, do I just want to have a plan in place, but do I want a plan in place that's the most effective for my employees, but then also combine that within the budget that I have, and what are those constraints? So we'll go over a few bits of information to talk about that, and we'll go over some details of that afterwards as well. And as Amy alluded to earlier, there's a lot of financial stress out there. All the connected points between every financial decision that needs to be made is getting more and more complex. The result of that is that employees are feeling very stressed about dealing with their financial situation. As the slide shows here, over time there's a percentage of stress uncomfortableness that people were feeling. Whether it's millennials, Gen Xers, baby boomers, there was a certain amount of stress by dealing with the financial situation. The far right portion of the slide here shows 2019 as 67% of employees in the survey were stressed, and that was even before the COVID-related issues that are taking place, so it's going to be even higher now. And this is just saying the trend is increasing, and going forward, it'll probably stay at an elevated level. Very pertinent to today is COVID-19, and it's the impact that it's having on everybody, whether you are of a lower salary range or a higher salary range, younger or older, there's an impact. And one of the largest responses for people that were polled was, what is the most important issue that you have now? Is protecting my wealth. So a lot of you employees are going to say, I just want to protect my wealth. I want to be safe now, but also going forward. And that is by all categories here of age, of income, of gender, it's protecting wealth. Protecting wealth has a number of different components. It's assets, retirement assets, life insurance, a home or mortgage. These are all things that comprise my wealth. I need to protect that. The question is, how many individuals really know how to protect their wealth? It's a great question, but how to execute it has some uncertainty. And that's what the financial wellness programs can come into play. A lot of employees are looking for guidance to solve that question. How do I protect my wealth? How do I take care of myself and my family? The slide that's on the screen now shows some general categories of when employees and individuals are actually reaching out and asking for help. The first line, 35% of those that were polled were talking about financial decisions, major decisions like buying a home, how much to save, how do I make investing choices. 26% when there was some sort of financial crisis. They had debt or too much debt. Credit card debt was becoming an issue. Unexpected expenses, or what's affecting people now, job and income loss or lack of cash flow, especially because of the COVID-19 issues here, and then some other categories. So regardless of where we stand individually, there's probably going to be some amount of stress that we find, and a large number of us as individuals want some guidance. We want guidance in those decisions of buying and spending and protecting, but we just don't necessarily know how to do that. And that's where the different financial wellness tools can start to come into play. Part of that are the employer programs that are offered, and they are extremely important. Individuals always have the ability to go on Google and search different financial tools and websites and resources that are out there. Maybe they have a personal financial planner, but most people don't have that or the means financially to do so. And more are starting to look to employer programs for that assistance. Very significant is that when a financial wellness program is offered by an employer, most employees that say they are stressed with finances are going to use that financial wellness solution. That is part why it's very important to understand who is your employee population, what are their specific needs, and if you're going to implement a solution, does it really fit those needs or does it fit as much of them as possible? 72% of those employees that felt financially stressed would actually use a financial wellness solution. So in terms of a benefit that an employer can offer, putting the time and resources into a solution, it will be utilized based on the statistics. And here's just a recap, again, even though we talked about it frequently, why is a wellness solution in place important to your organization? And we can't really state this enough, but it happens year after year after year, is that financial stress causes an impact on employee, which then also relates to the employer. Some of the major causes are increased health concerns, and that could be actually feeling ill, having certain issues and missing work, troubles with relationships at home because of finances, or being distracted at work. So what does that mean to an employer? You might say, does that really affect me? Is it now in my purview or responsibility to address these kind of issues. If an employee is stressed, we've seen that there is a direct correlation to physical health. That could also come into play with more utilization of healthcare plans, which is an increase of healthcare costs. There's a loss of productivity by being distracted at work or being at work and just not paying attention, so I'm not being productive and doing the best that I possibly could do. It also comes into play with having lower retirement savings or increasing medical expenses. So it is a significant impact that we find ourselves in individually, but as an employer organization, it does affect us, and sometimes we see that on the bottom line. Sometimes it's invisible, we can't see it, but it does affect overall productivity and budgetary issues. So what's happening in the marketplace in general, right? We talked about at the very beginning of financial literacy. We didn't really need an employer program for that, but now as the benefits world has increased and we have a lot of different options for employee benefits, what are most employer groups looking to do? And the bottom line is most are looking to add some sort of financial wellness solution or help to the employees. According to a Bank of America report, 53% of companies were offering some sort of financial wellness programs. And that was twice as much as 4 years ago. So the trend is increasing because the need is significantly increasing. In the Employee Benefit Research Institute's 2019 survey, they were saying that over half reportedly were adopting financial wellness incentives. Another 20% were actively implementing, and 29% were interested in implementing such initiatives. And this is all an increase. So more and more employers are seeing the need to help their employees. Their employees are looking to them for help and assistance, and the trend just continues to increase. On the employer side, though, what are some of the top concerns that employers have? You might say, we definitely want to help our employees. They need help. What can I do, and how can I do that in conjunction with all of my other concerns? Number one, effective utilization of benefits. Time and resources and company resources are put into creating a benefits package that's appropriate for the firm, the philosophy of the firms, and the employee population. Definitely want to make sure it works efficiently. Budget and money management. Budget on an employer level because of financial constraints, and also budgeting for employees on an individual level, what they can budget within their personal constraints. Controlling healthcare costs and making sure our employees are saving and funding retirement plans properly. Those are the top concerns that employers are facing when they're looking in the realm of financial wellness. So when we talk about financial wellness and solutions that are available to employees, what's out there? So back to the initial question is, as an employer group, are you at a point where you want to consider a financial wellness option? If so, which one do you choose and why, and what really is out there? How do I make some decisions to narrow down what's going to be the potentially best fit for me versus some other organization? And here are just 4 general categories to keep in mind, and there's more categories and subdivisions, and it'll range from what they try to do, what their goals are, and cost. Some are free, and some have a charge. So the very first portion are specific single topics. For example, an application that might help you create a budget, or an application that might help you with student loans and paying off student loans, but it doesn't affect any other financial considerations. The second category is dealing with retirement plan providers. And the retirement plan providers are primarily focused on increasing retirement assets, helping people become prepared for retirement, making sure they have enough dollars accumulated for a certain amount of income, but they're limited in scope as they can't really go too much into personal finances or workplace benefits. The third category would then come down to education and coaching. More educational tools and resources are available, possibly with some online or in-person coaching to help answer those questions that employees have. Back to the COVID-19 slide. How do I protect my wealth? What do I do to achieve that? These are systems that are still very user-driven, but a lot more information is provided to help someone look at their personal finances and including certain workplace benefits. And the last category comes down to fiduciary advice. And again, in this category, it could be a solution that's very narrowly targeting one specific aspect or a wide number of aspects of somebody's financial life. The end goal of the fiduciary advice is to help employees with their question, what do I do? The advice will tell them what to do and how to do it and what the benefit is going to be for them. And that leads in a little bit about where Savvi comes into play. Savvi is the fiduciary advice solution of those four. So what is Savvi and how is this related to other advice solutions versus other solutions? Savvi is an online financial wellness solution that looks to help individuals bridge the gap between personal finances and workplace benefits. How do I create a budget? How do I increase my emergency savings fund? How do I pay off my mortgage and or send my children to college? But at the same time, how can I save in my 401k plan, my IRA account, HSA? And if I have a limited budget, how do I do all of those things? What's the best use of my dollars in each of those categories so that I can create an action plan, know where I need to go, but prepared for my future goals? One of the things to look at, too, is whether something's a fiduciary advice or an education. Is somebody a fiduciary or not? So, for example, Savvi is a fiduciary. We give unbiased advice, and we do not sell any kind of product. That is another consideration, whether that's something that will affect budget considerations in a program that's in place to be independent and neutral, or using some other recommendations to help pay or offset the costs of the solutions. As an example, this is just an overview of what employees would receive with this kind of solution. It's specific answers. So if an employee says, I have 4 goals, I have limited budget, I don't know how to accomplish my 4 goals, create an education account, an emergency fund, HSA savings, and retirement plan savings. A solution like Savvi will tell you exactly what you need to do, what accounts to open, how much to spend optimally for each. Great. Thank you, Amy. I'd like to turn this back over to you now.
Amy, are you on mute?
Yes, here I am. So thank you, Bob. Thank you for that. And we're going to step into the next portion of the discussion to talk about cyber wellness, which is kind of a newer term, but how that relates to identity theft and whole cyber health. And this actually really goes into 2 different categories for the employee and the employer. And I will say something that I've been fairly passionate about in guiding employers is that, especially now, they're at a greater risk because of employees working from home and using virtual working tools, the internet, that it actually puts the employer more at risk more now than ever. So I know that that's something that Scott will bring up, but something I wanted to put an exclamation point on before we stepped into Scott's session. So Scott, over to you.
Awesome. Thank you, Amy, and thank you, Bob. Really appreciate that. So hope everyone out there is having a great and safe day, and look forward to walking you through some key points. We're going to introduce a new concept of cyber wellness, and you may want to think, or you may think about, how does that tie into financial wellness, or this total well-being concept? And the reality of the situation is, I don't think you can successfully in today's world achieve financial wellness or total well-being without a focus around cyber wellness. So, as organizations look at helping their employees, particularly in this environment, they need to add this new component to financial, physical, mental, and now cyber, because everything we do exists around is connected to the web. As I sit here working from home, I have a son home from college who's downstairs working on his device. I have my wife in the other room working on her device, and we're all leveraging the same home network. Obviously, I'm connected into my company via VPN, but I'm now at additional risk because other people are using that network. And so this cyber wellness concept is something that I think is really going to grow in popularity, because we're connected all the time and to everything. And so the fact that employers are asking us to do more online, I think they're going to need to step up to the plate and help protect us, but protect us on the personal side. When we talk about cyber wellness, we're talking about personal cyber wellness, how that impacts when I use my phone or use my iPad. Obviously, my employer is providing VPN and other protections, but we're accessing company networks and we're accessing many different things from many different pieces of equipment. And so that's putting our employer at risk, as Amy just said. And there's a stat out there that says 81% of all corporate breaches are a result of someone's identity being stolen or compromised. And so employers now need to step up to the plate to protect themselves, but obviously protect their employees and their family, which ultimately protects their financial, emotional, and physical well-being. So cyber wellness is this new concept that lies beneath or on top of total well-being, providing an additional level of coverage. And so when you think of Aura, the company that I work for, what we're looking to do is our primary product has been around identity theft, Identity Guard. And that's still the tip of the spear and the key piece of what we're doing. But when we think of personal cybersecurity, or what we like to say, placing a digital halo over each of us to protect us physically, financially, digitally, and technologically, it's more than just identity theft. But that is the key point that really is the launching pad to do these other things. So we're rolling out Privacy Mate and a VPN solution and an Entrusta antivirus product. And these are just all additional layers of security that employers can make available to their employees, and their employees can make available to their family, to provide extra level of protection to ensure that everyone is getting that extra level of protection to ensure that they're ultimately going to achieve financial wellness. So when you think about this, many Americans are victims and have compromised identities. 11.7 billion records between 2016 and 2019. And 72% of employees don't think they've ever been a victim of identity theft, yet it's happening at all different levels. And so there's just a lot of individuals out there that are naive about this topic. Employees with cybersecurity solutions that they're offering to their employees, employees that are receiving cybersecurity solutions are 3 times more likely to be aware if their identity has been compromised. Unfortunately, though, 30% of those employees say that their employer provides them with cybersecurity solutions. I just enrolled my son into Identity Guard last night, one of my sons, and immediately he received notification that his username and password was compromised on several sites through some dark web scans. He's like, well, big deal. I was like, Ryan, that could put you at risk because you do all of your banking online, and I bet you probably use the same username and password for that. And you're enrolling for your college student loan, and you're probably using the same username and password. People are very naive about this topic, and we need to do more about it. And so, as you can see here, the numbers are really quite challenging, in that large populations of individuals are receiving and being victims of identity theft. And so what we're trying to do is really step up and change the game. So 450 million is the number of records with PII, 19.8% year-over-year increase. 35% of the percentage of consumers who have been victims. And so it just goes on and on and on. And so what we're trying to do is change the game and make people more aware of it. And now with COVID, it's even a bigger problem. Issues with stimulus checks. With the IRS delaying tax returns, more and more people are having their tax returns stolen. Phishing scams are at an all-time high, particularly targeting elderly people with verification of PII on the telephone. I just enrolled my mother on the program to make sure that she's protected. And unemployment claims, if you do a search on identity theft, the amount of people that are filing false unemployment claims, which is preventing people from getting that money that they need. All of these things are how we're under attack. And employers really need to step up to the plate and make sure that they're providing various levels of protection to their employees to help with that. And unfortunately, even as COVID settles down, it's not going to stop. Scammers and hackers will continue to innovate, as scary as that is. I mean, we talk about voter fraud and we talk about all of these other things. The bad guys are always going to be out there looking for ways to get access to information. And there's this whole dark web that you typically hear of, where people are buying and selling information, and it's amazing. But there's an actual value on somebody's personally identifiable information and how people can use that. So we need to make sure that all parties are participating. But what's really scary is, it doesn't matter what age or what generation. As somebody that's a boomer, we have something bigger to protect, and we have more. But we need to step up to the plate and make sure that we're protecting ourselves and protecting our family. As I mentioned earlier, I enrolled my mother on our product to make sure that she's getting the appropriate level of protection, because she has assets that she wants to protect. And dementia now with the elderly, people in nursing homes are stealing people's identity and taking advantage of those situations. So every generation has the problem. The generation before that, they have high level of debt with not a lot of savings, and certainly now with everything that's going on, it's a bigger problem. But these are individuals that are trying to build wealth, and so they make more online purchases than any other generation, which puts them at significant risk. We look at the millennials. This is where my kids fall, at least at the top end of the spectrum. Although they don't necessarily have the assets, but they live on the internet, whether it's social media, banking. My son the other day came to me. He doesn't even know how to write a check. He's never written a check. He's only ever done everything online, and so they will give up information. Just using the example last night, well, I'm not worried about my username or password being exposed. So it's a continuous problem. And then we think of children. And now, with all these kids being at home and not in school with extra free time, not only is it an identity problem, but there's this emerging issue with cyberbullying. Kids are getting on social media because they can't go down the street and talk to their friend. So more and more of them are communicating through social media. And an emerging trend is cyberbullying. And so you think about, what does that have to do with identity? But it's a component to help making a parent aware that something could be going on, and that their kids are potentially under attack. And so they can connect through our solution, and leveraging IBM Watson, we're able to use artificial intelligence to provide alerts to specific information. But children are under attack. People are leveraging their Social Security numbers to create accounts. And unfortunately, they don't really find out about it until they go to apply for their first college loan or their first car loan, and suddenly they find out that they've been victims. And what's even worse is many times it's a family member, because they have access to the information and have built trust. So all of these generations are significantly under attack. And so as an employer, your employees are sitting there thinking about, how am I going to make that rent payment? How am I going to make that car payment? Should I stop the 401k contribution? I have student loan. And so it's a significant issue where cybersecurity and personal cyber wellness impacts your employees' overall financial wellness. And so if you think about this, how does Identity Guard help protect? The example here on the slide is, leveraging a fire alarm. You wouldn't want to wait 30 minutes or an hour to know that your fire alarm was going off. You want to know immediately, because you want to stop the situation. And that's what Identity Guard is designed to do. It's designed to get access to information and allow you to potentially stop a cyber crime or someone taking over your identity. And so that's what makes us unique and different. And even more so, the fact that we're connected to all three credit bureaus. A perfect example, I'm refinancing my house. Day before yesterday, within 15 seconds, I received an alert that Fifth Third Bank had done an inquiry, and I received it through TransUnion. Within 2 hours later, I received a notice from Experian saying that they had received a notification. The next day, 24 to 36 hours later, I received a notification from Equifax that I had received an account. But what's so powerful about what we're doing is we're connected with all 3 credit bureaus. So whoever gets that transaction or data first, we're going to alert. And if that's not me, I can immediately stop it and prevent the bad guy from doing what they want to do. And so that's what's really powerful about access to information. And, we're even talking about unemployment claims, thinking about that as the next big concern, and if there's a way to potentially alert off of that. But what we're trying to do is help you understand if someone gets a hold of your PII, we want to alert you, and then you immediately have a notification that says, hey, is this you, yes or no? And if it's not, we want to have someone get on the phone through our resolution team and actually help you resolve that particular situation. And so it's all about helping create awareness and give you the ability to stop the situation. And so cyber wellness protects your financial wellness because we're providing you access to tools to provide you solutions and information, and we're giving you access to around-the-clock protection and resolution services, and giving you the knowledge and assistance to stop it, and it's all wrapped behind an insurance policy. So those are the things that we're doing to create this category of cyber wellness to protect you individually and your family, and ultimately help not only protect you, but protect your employer from the bad guys. And one last thing, I don't really have a slide or talking about it, but Amy alluded to it. As we're talking about financial wellness, employers, as they sit down and evaluate budgets and understand where to put money and invest in which solution, which it could be Savvi or it could be a point solution for X or Y. One of the things that employers are going to need, particularly now to get budget, is where are their problems? Who in my workforce has a student loan problem? Who in my workforce is struggling with defaulting on their mortgage or their car? And so as they're looking to define which financial wellness benefits to invest in, they're going to need access to information to help them justify where to place money, because student debt is obviously a very, very hot topic. But if only 20% of your workforce has a student debt problem, is that really where you want to put your investment when 80% of your population is struggling with other forms of issues, whether it's defaulting on their mortgage or their car loan or potentially experiencing issues that could cause bankruptcy with credit card and so on. So one of the things we'll be launching over the next few weeks is a financial wellness analytics report that will actually allow employers to bring some of this data together, both census data from the employer around income and other related data merged with credit data. And we're going to look to try to bring in some other cyber data that we can bring to the table, but providing an employer a roadmap that they can sit down with their consultant or broker and actually make informed decisions on how do we invest money because we have bigger problems in this area or that area. And so Amy alluded to that earlier, and I just wanted to touch on it. Didn't really have a slide for it, but those were the key things that we wanted to drive home in the message today, as we hopefully come out of this crisis. Employers are going to need to have tools, and we believe that cyber wellness will play a significant part in helping employers help their employees achieve both financial but overall total well-being. So with that, Lynn, I'll turn it over to you for Q&A, and look forward to any questions.
Great, Scott. Thank you so much. And we do have several questions submitted already, so let's dive in. The first one is, Do you feel there may be an unintended consequence that may not be realized under the CARES Act with fewer restrictions for loans and early distributions for IRA and 401ks?
That's a great question. I'm going to ask either Bob or Amy if they have a point of view on that, since they are, particularly Bob, more focused on specific financial wellness pieces. Bob, any thoughts there?
That's, especially when you get into taxes, it becomes a complicated situation. And with the CARES Act, there are some provisions which allow distributions to be made, and sometimes that is to the benefit of an employee to do that or an individual to do that. The question, like you mentioned before, is knowledge and information. If somebody's going to do that, make sure that they have the resources and the tools, or what's being presented is specific enough to give the right information to show, are you eligible, number one? How does it affect you, financially in terms of taxes? And is that the optimal decision? Just because you can take a distribution out of a qualified plan may not be optimal. It might be taking another distribution or loan or something else would be more beneficial. Sometimes, based on your whole financial picture, that might be optimal because of repayment or other considerations. So I would just say it is there, and sometimes having some information but not enough information can make a decision not optimal over the long term. So it's making sure the knowledge is there, the information is there, and making a very informed decision. It's complicated.
Okay.
That's the problem.
Yeah. Thanks, Bob. And Bob, correct me if I'm wrong. I spent some time in the student debt business about a year and a half ago. I think under the CARE Act there are some provisions that are allowing employers to treat employer contributions, helping employees pay down student debt. May have some play with the CARE Act. I don't know if that's something that you're familiar with, but I've heard that. And if you have any additional detail on that, great.
I don't specifically on that. I know in general concept, yes, but on that detail, I'm not positive.
Okay. Well, if anybody has any interest, send me a note and I'll connect you with a colleague of mine that's an expert there. But I'm pretty sure there's some advantages for contributions, but I'm not an expert. So happy to direct you to the experts. Lynn, other questions?
Thank you. Yes. The next one is, are there any newer methods to help fund some of these items if an employer was looking to support the expense either entirely or at least partially?
I'm familiar with a couple, but Amy, I think there's maybe something that you have a thought process or point of view on related to this.
Yes, actually, something that I've been researching over the past year or so that I'm actually pretty excited about from a broader scale, but I think specifically, especially in this era where employers are obviously going to be very pressed to come up with additional budget items, but they need it now more than ever. There are some methods. It's a longer conversation than what we have for the Q&A. I would be happy to offer that up to any of the advisors for their clients or for clients directly if you want to have a follow-up with that, because there are some pretty exciting things that are emerging in the market that provide the type of funding from things that are just directly under your nose as of today, which frankly it's kind of taking the air out of the tires of a truck under a bridge, which I'm really excited to share. But there could be very significant and specific funding mechanisms for things just like this that are in the health and welfare employee benefit arena. That would be an employer expense that they could leverage these areas to support that expense, especially now more than ever. I think we'll be offering up our contact information afterwards, and this is literally, and I think everybody's contributing in some way, shape, or form, which has actually been a delight to see both the provider market as well as everybody really offering up how can we help, and this is truly free consulting that I'm giving away, and happy to do that now that I'm Switzerland and in a position to do that. So whether you're an advisor looking for some tips for your clients or you're a client directly, I'm happy to offer that up and guide you through some of the areas that I have been uncovering just to share the information and the knowledge.
Thanks, Amy.
Thanks.
I'll make sure that when we follow up with the replay that everybody's contact information is available so that anybody can reach out and ask any questions. Lynn, back to you.
Awesome. Okay, next question is, we hear a lot about student loan debt. Since this doesn't serve an entire employee population, what are a few solutions that can solve for student loan debt and address other financial wellness issues?
Yeah, I can. This is Scott. I can take that a little bit, and I alluded to that topic related to the analytics because we have a slide that we show looking at different problems, whether it's student debt or pet insurance, and looking at different voluntary benefits and what percentage of the population actually needs that particular service. And what's interesting is tying it back to our business, specifically to identity theft. Virtually everyone's been a victim of it. But specific to the question, the analytics that I talked about earlier, so we can actually provide an employer a set of analytics where I mentioned earlier we're taking the employee census data and income data, merging it with the credit data, and then providing it back to them in an aggregated fashion, obviously depersonalized. But then you can go in and look at the different generations that we highlighted earlier, or look at certain income groups or certain tenure, and really determine, specific to student debt, does everybody have a student debt problem, or what percentage has a problem? And so employers can use this data to one, help them create the roadmap of benefits that they want to offer under the financial wellness umbrella, and then begin to not specifically target it to individuals because they're not able to do that, but they can look at different generations and think about the trends that exist within those, and then target certain messages. Maybe they have a discount club program. Maybe they have a payday loan program that they're offering. Maybe they're offering student loan benefits. Maybe they're offering a comprehensive program like Savvi, or I can go on and on with the different employee benefits. But having access to information to understand the financial health of your workforce will allow you to get much more targeted. And unfortunately, with the high unemployment and many people defaulting on student loans or delaying payments on mortgages and credit cards and car payments, the financial debt problem is going to get bigger. And so I think it will benefit employers to look at this kind of data to have a more targeted approach versus just throwing out something and wondering why 70% of the population didn't take advantage of it. Well, 70% of the population may not have that particular problem. So it allows you to get very, very focused. So happy to talk on that more as well if somebody wants to reach out. And Amy's an expert on this topic as well. So next question, Lynn.
Do you have any suggestions on programs to help employees absorb the financial shock?
Wow, I think we all could talk on that one. Amy, you have any thoughts on that one?
Well, actually, I'm going to push a slide back out there, if I may, and actually to follow up with what you were talking about, Scott. You look around this wheel, and first of all, it's identifying where is the source of the stress, what is the issue, to Scott's point. And there are definitely a number of, really interesting and varied, and things that you wouldn't even have imagined would have turned into an employee benefit or an employer benefit, whether it's employer paid or employee paid. I think the key is identifying what is the real source of the problem. And I'll give an example to expand on Scott's examples. There are programs out there today that really help employers to offer coaching for credit score remediation. That's huge. You think about, credit scores, a lower credit score can have a significant impact on how much people are spending on day-to-day expenses, insurance, certainly your mortgage, and your car loans and credit cards, but even your auto and home insurance, things like that. But it's getting that prescriptive view of what is the real problem, and then coming out with the prescriptive solution, and actually segregating that and, stratifying the risk for each of the employee populations and applying that solution in a pinpoint. I think that's more important now than ever because not everybody is going to have one area of financial stress. So A, it's identifying where the source is, and then B, working with your consultant or your advisor to identify the solutions that are out there that can help offer the solution for a specific area of risk, like for caregiving costs or things like that. Even to the point where most employers are offering that on employee per month, but I've seen many providers that are offering the pricing on per utilization as opposed to per employee. So really getting a very laser-focused approach on what employer offers, where they devote their resources or funding, what should they offer to employees that they would buy themselves, and then how do you communicate it again through, a tool that is effective to do that, like Savvi.
No, that's a great point, Amy. Bob, anything to add to that?
That's really an interesting thing because what the wheel shows here too is how life decisions have really changed so much from personal finances to employee benefits, and where is that real intersection point and what's the most help that an employee needs, and that's where employees and employers are driving to, is making sure all these connecting points are interrelated and being able to address all of those in a comprehensive way. And that's going to solve the solution for people. Absolutely.
Lynn, I know we're getting close on time, and I think you may have other questions, which we can certainly do via email or however you want to handle it. So I'll let you moderate us through this.
Well, thank you very much. Yes, we are at the top of the hour, and that does conclude our seminar. If we didn't get to your question, Aura will follow up with you offline. I'd like to thank everyone for joining us today for the webcast. We hope you found it valuable. And I'd especially like to thank Amy, Bob, and Scott for taking the time and sharing their insights and experience with us. Also, a special thank you to Aura for sponsoring this event. If you missed any part of the presentation, you'll be able to listen to a recorded version within 48 hours on the EBA website. We'll also be sending you an email with a link to the recording. Thanks again for being with us, and have a great rest of your day.